Hello, everyone, and welcome to the AFCPE presentation of Finances and COVID-19, Practical Tips for Surviving a Pandemic. This session is meant to be a question and answer session for all consumers struggling to figure out their personal finances during this pandemic. And in this session, we will cover the following topics: the CARES Act provisions, including reimbursement checks, retirement distributions, and student loan provisions, unemployment compensation, mortgage and rent help. Please feel free to put your questions in the chat throughout the session. You might want to set your chat to all panelists and attendees so that we can all see your questions. They will be answered at the end. We have three experts here to help you today. They are Dr. Mary Bell Carlson, who is a financial behavior expert and has worked in both the military and intelligence communities for the last decade. After getting married and having her two daughters, she started ChiefFinancialMom.com, a personal finance education platform to help busy moms. Currently, she also works as an adjunct faculty for the financial planning programs at both the University of Georgia and Texas Tech University. She'll be discussing the stimulus checks and retirement provisions. Dr. Michael Thomas is an AFC and the founder of Modem Solutions, which provides virtual financial counseling and coaching services to individuals and households looking for compassionate and competent financial advice. Michael also co-hosts the NPR-affiliated radio show Nothing Funny About Money, and serves as a lecturer in the financial planning departments at the University of Georgia. He will be discussing unemployment assistance and eviction moratoriums. Ryan Law teaches in the personal financial planning program at Utah Valley University, where he is also the director of the peer-to-peer financial counseling center, the Money Management Resource Center. On the side, he also maintains a personal finance blog and helps clients with their student loans through his company, Student Loan Planning. He is the current AFCPE president, and he'll be discussing foreclosure moratorium and student loan provisions. My name is Summer Red. I'll be answering questions in the chat, and I am an AFC.
Excuse me. Welcome, everybody. We're glad to have you today. I'm Mary, and I'm going to get started. We put this together specifically for consumers. I know we've also got a lot of help providers here, too. Excuse me. So please take this back, and I hope this information is helpful. Our focus part, the first half of the session, is kind of just going to be us talking about the various provisions, especially from the CARES Act that just passed last week. So we'll kind of give you a dive into that. For you health providers out there, especially AFCPE professionals, there is another more detailed one coming up, presentation coming up next week, so you can look for that for even more information. But primarily, this is what consumers, for all consumers out there to know and to kind of know what's going on with it. I'm going to start off with stimulus checks, since that seems to be everybody wants to know about the free money part. So we'll kind of kick it off there. The first off to know is it is, and I hesitate to say free money, but it really is. It will not be taxed. There's no, you have to pay later, you'll be taxed on this money in the future. It is just the money for you to spend and help put back into the economy. This is, somebody asked if it is for U.S. citizens. Yes, it is for U.S. taxpaying citizens. You must have a Social Security number for you to be able to receive these stimulus checks. So here's the deal. They're $1,200 for individuals, up to $2,400 for married couples. You have an additional credit of $500 per child, and here's the catch: under the age of 17. So for all of you that have high school seniors out there or college students who are still claimed as dependents on your tax forms, you will not receive any money for them. In terms of, so for example, let's just do a quick example out loud. If you've got a couple that is married filing jointly with two children under the age of 17, they can receive up to $3,400. Now, we will see these checks starting to roll out as early as April 9th is what I am seeing currently. So that's literally next week. If you have a direct deposit set up already and you receive your refunds through direct deposit, that amount will go directly into that bank account. So you'll want to make sure that that bank account information is up to date. If you have moved and you do not have direct deposit, I think about somewhere between 70 to 80% have some sort of direct deposit set up. The remaining 20 to 30% of you that do not, it will be mailed out in a hard copy form. They do not want to mail out hard copy, but they want to get the money in your hands. So I would encourage, if you don't have that set up, go to the IRS website now input your information for that to be sent out electronically, and then you can be able to take it from there and be able to receive that money when it does come through, and it's more automatic that way. For a caveat here too on phase outs. So this is for married filing jointly. It is phased out for you, meaning starting at $150,000 on up, you will only receive portions of it up to a certain point, and then you will not receive any of that money. It's $112,000 for those that are head of household. So if you make over $112,000 as head of household, you will start to fall into that phase out amount. And then for married filing separately, or for single or other types, it is $75,000. And that is across the board. So those are the phase out amounts if you make over that. Those are what you will receive less up to a certain point until you won't receive any of that money coming in. A couple of things on this that I think have been interesting is, as I mentioned before, if you've got I've had quite a few college students come up to me and say, hey, I'm 22, how much money am I going to receive? The answer is, if you currently file your own taxes, you claim yourself as an independent on your tax forms, you will receive the full $1,200, assuming that you file as single and that you're making less than $75,000. If you are still on your parents' tax returns and they still fit those phase out requirements, then they will not receive any money. They will not receive that extra $500 for you. So those are kind of the quick overview. I know there's a lot more questions on paychecks, so I'll come back in the Q&A. The other area that I wanted to talk about, though, is the COVID-19 retirement distributions. And I want to be very careful how I say this. So it is in the CARES Act. And so I want to give you the information up front. By no way am I saying this is a good idea and you should do it. I think it's information you should know about. And if in the appropriate situation, it might be needed. So now, in the past, it's $50,000 that you could take out of a retirement account for certain situations. Right now, you can take $100,000 out penalty-free, but you must take it in 2020. When I say penalty-free, usually there is a separate retirement tax if you take it out before you're 59 and a half. That has been waived currently, and it can only be the vested balance. So let's say you only have $50,000 vested in your retirement account. You cannot take a full $100,000 because the vested balance is all that you can have there. It is still taxable, but it is spread over the 3 years. So again, let me clarify, there's not penalty to it, but if it is a 401k, if it's an IRA, if it's a pre-tax contribution, it will still be taxed when it comes out. That is obviously not true for Roth or other accounts that you've already paid the tax on, but that will be spread over 3 years. You can repay that over 3 years as well and will not have that penalty. Not have to keep that out. So you can replenish that account. Now, is this a good idea? The question really is, it depends. It depends on the situation. What we're talking about now, just because you can take out $100,000, by no means do you have to take out $100,000, or should you take out $100,000. My real concern here is really you need to keep your mask on first. So as they say in the airplane, you have to have your own mask before you start helping your children or those around you. And I think that's very true for retirement as well. That if you are close or even far from retirement, if you take it out now, that money more likely will never get replenished. And even if it does, you've lost that time and opportunity for it to be out of the market. So I would really encourage you to look for other options, other scenarios before plenishing those retirement accounts, and really looking for some other means and ways. And we'll go through a few on this sample and discussion. But that really isn't, I wanted to put it out there because it is an option, but there hopefully are some other ways before you start taking from it. And if you do need to take from it, take in increments and not the full 100,000 to be able to keep that retirement mask on and keep you ready for retirement. Switching over, Michael's going to talk to us a little bit more about unemployment.
Yeah, so again, thank you all for being here. And so as we go through this conversation, there'll be three things that we kind of talk about: are eligibility, payments received, and access. And just generally at the top of the slide, I just have pandemic unemployment assistance. If you actually ever have an opportunity to look at the CARES Act, it is broken out a little bit more detailed. Sections 2102 speaks specifically to the unemployment assistance piece of this. Section 2104 speaks to the unemployment compensation piece of this. And then there's actually something called the pandemic emergency unemployment compensation piece as well. So there are three different levels of this, but they all generally work together to try to provide optimal benefit to individuals and households. Next slide, please. Thank you, ma'am. So with eligibility, if you'll click one more time for me, Mary. With eligibility for unemployment is determined by, and this is very important, it's going to be determined by your state's Department of Labor office. Different states have different criteria and rules as it relates to the unemployment process and filing for, and the length of time in which individuals could be under the unemployment insurance in their particular state. So one of the things that I strongly would encourage for each of you who are listening here is to definitely go check your state's Department of Labor office and understand their criteria and things of that nature as it relates to, generally speaking, unemployment insurance, even though there's going to be some federal backed dollars as it relates to this. In large part, the decisions are going to be left to the states as it relates to who qualifies for unemployment, and then also based on guidance that's being provided by the federal government. Next slide. So CARES covered individual. This is language that actually comes from the Act. Unemployed or partially unemployed individuals due to COVID-19. This is for layoffs, furloughs, reductions in hours, so on and so forth. So when we talk about unemployed, so traditionally for unemployed individuals, you had to be employed by an employer. Next, please, Mary. But there have been some expansions to what it means to be unemployed. So there's expansion. Eligibility includes independent contractors, those who are self-employed, and individuals with a limited work history. Again, if you go to, I've actually checked maybe 5 or 6 sites from different states, you might see some language to suggest that to go ahead and file unemployment benefits anyway, but the states are still awaiting some more official guidance from the federal government as it relates to how to execute this process as well. So what this means, though, in terms of the expanded eligibility, is that if you were an Uber driver, for instance, you would actually be covered, and it would provide you an opportunity to potentially qualify for unemployment insurance. This was not the case under traditional unemployment insurances from states. So for many of us, if we're reading reports and looking at the news where we see unemployment up to like 10 million households, things of that nature, individuals, a lot of that is because there's an expansion of individuals who can now apply for unemployment, especially independent contractors and self-employed individuals who are not able to do this initially. So the CARES Act expands the opportunity for more individuals to be able to apply. So individuals who had to quit their job, generally, if someone quits their job, that's not generally covered under unemployment insurance. However, if it's because of something through direct effect or direct impact of the coronavirus, as it relates to having to care for someone, maybe it's because of a quarantine situation and where you can't actively go out and work, or let's say due to school closures, it was just in your best interest to be able to have to stay at home to tend or take care of your child. There are situations that cover you all in this particular situation as well. Next. All right, so click on. So basically what we have here as it relates to the uninsurance piece, this is section 2104 of the CARES Act, and this actually speaks to the unemployment compensation piece of it. National averages range between $360 to $400. Now that depends on an individual situation, but averages range between that. So if you applied for unemployment, you would actually receive the unemployment that you would receive under your state's current regulations. And then there would also be an additional $600, and this is the federal pandemic unemployment compensation piece. What's very important to understand about the unemployment piece or the federal pandemic unemployment compensation piece is that this additional $600 is only set to last through July 31st. So it's very important to understand, if you're reading information about that particular $600, that it's actually will stop at a certain point in time, even though that there will be additional coverage moving forward. So this is now through the end of the year. Or if, let's say, if somebody filed for unemployment, but it was after the July 31st, there isn't anything stipulated within the act to suggest that there will be an extension on that $600 for those households. And when it comes to payments, states actually have the option to make payments either separately, as it relates to their own unemployment insurance and the CARES pandemic unemployment compensation piece of this. They can either be made together or they could be made separately, but states must submit those payments within the same week of distribution. Next slide, please. Access must file again through your state's Department of Labor office. You can apply for benefits over the phone or online. Many offices are now closed based on, again, us navigating COVID-19 and trying to protect the welfare of the people that work for their offices. And benefits through the state, generally unemployment benefits last 26 weeks. This isn't the case in all states. So again, it's very important to understand your state's laws, but the CARES Act will extend benefits an additional 13 weeks for a total of 39 weeks of coverage on average. And that 13 weeks is actually a part of the pandemic emergency unemployment compensation. So for instance, if there are households right now who've already been on unemployment and they're about to exhaust their 26-week period, they can actually enact the emergency unemployment compensation that will help cover them for an additional 13 weeks. All right. So moratorium on evictions. So really quickly, we'll talk about definition of moratorium, eligibility, and access. Next, please. So definition is that it's a legal authorization to debtors to postpone payment. Operative word here is to postpone payment and not do away with payment. Now, there are some states and some cities that have taken more proactive measures, but it's very important to understand what's happening at the state and city level in your particular community as it relates to this. But as it relates to the CARES Act, it's simply a postponement of payment. In other words, payments are deferred, not forgiven as it relates to the CARES Act specifically. The CARES started a 120-day moratorium on evictions, assessing fees for late payments between March 27th and July 24th. So basically what this means is that for many households who ultimately decided maybe on April 1st, or the early part of this month not to pay for their rent, that there is this moratorium that's in place as long as that rent is under a covering where the owners of that building or multifamily building is backed by the federal government. They are covered then under this lens. Now, it's very important to understand that the language in the moratorium is based on evictions for non-payment specifically. This is also a very good opportunity and time for individuals and households to read their state's laws as it relates to landlord and tenant rights, because explicitly, a landlord cannot evict someone who's covered under a federally backed loan for purposes of non-payment. However, if there are other violations that are made within a leasing agreement, that is not covered under the CARES Act. So it's very important to understand that. Okay, next slide, please. So individuals covered by moratorium on tenant evictions must live in a property that is backed by a federal mortgage loan or is listed under a covered housing program, Fannie Mae, Freddie Mac. On the Fannie Mae and Freddie Mac website, you can actually find information in some instances to determine whether or not that is the case, or whether it's HUD, FHA, VA or residential housing type programs, and is listed as a covered housing program. And this would be something like public housing Section 8 or the low income housing tax credit. So with this moratorium, as long as individuals are living in housing that is covered or backed by a federal loan as it relates to whoever owns that property, you are covered under this moratorium. However, there are instances and situations, where there are individuals who are living in a dwelling or a covered dwelling that is not covered by a federally backed loan and it was privately financed. In those instances, individuals are not covered under this moratorium. Next slide, please. And again, with access, especially in situations where you may feel as if you want to be certain as to whether or not you have these protections. So for everyone, it's very important to contact your landlord to verify that the property is backed by a federal loan or is listed under one of the covered housing programs. Do not automatically assume for this to be the case. Very important. Ensure that any leniencies or promises made by the landlord during or post-moratorium are communicated in writing, simply because under a lot of these laws, depending on individual states, you really don't have a particular body that's there to enforce a lot of these rules. So unfortunately, tenants get the short end of the stick. So be proactive in your communications. Effectively communicating with your landlord, and in whatever communications you have, make sure that you get that in writing. Please click next. And go ahead, we're good to go. Yeah, and I was just going to say here, if your home is not, check to see if there are any state or city-based moratoriums in effect. You can do a quick Google search there. There are several sites that are actually capturing that information so that you know what's happening on the federal level as well as on the state level, because you may be getting information, but these may be two very distinct programs and things with different deadlines and different requirements under each. There you go.
Awesome. Thanks so much, Michael. So this is Ryan Law, and I'm going to pick up here. And I do want to let you know that we do see all of your questions coming through. After I do my presentation about foreclosure and forbearance on mortgages and student loans, we will move into the question and answer session. And looks like we've got our hands full with lots of questions, but go ahead and keep those coming and we will get to those as soon as I finish this portion. All right, so let's start out then with the foreclosure and forbearance on mortgages. So if you look at this list here, this portion of foreclosure and forbearance only applies to those mortgages that are backed by one of these federal groups here. So from the U.S. Department of Housing and Urban Development down through Fannie Mae and Freddie Mac. And so your mortgage does have to be backed by one of these. And as Michael was saying, most people don't know whether or not their mortgage is backed by one of these. For example, I set up my mortgage through my local credit union, and then I pay it through them. And I found out just last week that it is actually backed by Fannie Mae. So you may not know that your mortgage is backed by one of these, even though it is. So you can check with your servicer and find out whether or not it is backed by one of these. All right, so moving on then to the foreclosure moratorium. So what happens here is that starting on March 18th, the lender cannot foreclose on the property for 60 days. And that means they cannot begin or finalize a foreclosure. So even if they were in the middle of a foreclosure starting on March 18th, they have to put that on pause for 60 days. So again, just 60 days where no foreclosures can happen if you've got a federally backed mortgage. All right, moving on then to the forbearance portion. So under a forbearance, you have the opportunity to not pay on your mortgage for a little while. So in order to get this one, you do have to contact your servicer, and there's no documentation that's going to be required other than you saying that you've got a COVID emergency of some type. So it could be a cutback in hours, it could be a layoff, it could be a furlough, something like that. So just as long as you can state that you've got some emergency and you need to put your mortgage payment on hold, you can do that. So the first period will last for 180 days. And then if that is still going on, you can request another 180 days after that. Now with this, there is not going to be any fees. And Mary, if you could advance the slides here. The only scheduled interest is going to accrue. So no late fees, no forbearance fees or anything like that. It is only going to be accrued interest that is going to get added to your mortgage here during this time. Now, obviously you're going to have to make these payments at some time. So most mortgage servicers are saying that they will just extend your mortgage beyond, if you've got 30 years left on your mortgage, you'll have 30 years and 6 months if you utilize all 6 months. However, this is important. All of your payments do have to be reported as current payments. So that will show up on your mortgage or on your credit statement as current on there. All right, let's move on now to student loan relief for borrowers. There's 3 portions that I'm going to cover here. First is the payment suspension. Second is the interest portion, and then we'll talk about involuntary collection as well. All right, so let's start with the payment suspension. Mary, if you just want to bring up this whole slide, thank you. So it's important to understand that this only applies to some student loans. So they have to be direct loans or FFEL loans, which are older loans that if you had loans prior to 2010, it's very possible that you've got an FFEL loan. And there's 2 different groups that hold those FFEL loans. There's the Department of Education holds some of them, and then financial institutions hold other ones. So again, this portion of the CARES Act only applies to direct loans. So if you see you look at your different types of loans, if it says direct, then it qualifies, or if it's FFEL loans held by the Department of Education. However, this does not apply to FFEL loans held by financial institutions or to Perkins loans or to private loans. So what happens with this is that all payments on those ones that qualify are automatically suspended until September 30th, 2020. And it is automatic. So you do not have to apply for this. You don't need to check with your servicer. This is an automatic thing that is going into place. And as looking at those suspended payments, there's a couple of things that are going to be very good for some consumers. So if you're going for forgiveness, such as teacher loan forgiveness and public service loan forgiveness or those other forgiveness programs, these suspended payments are actually considered payments. So basically you won't make any payments during the next 6 months, but they will count as payments towards that forgiveness program. Also, suspended payments are going to be reported as full payments to the credit bureaus. There were a couple of questions about Parent Plus loans. Yes, those are covered under this if they are direct loans, which most of them are, but there are some out there that are not. So as long as it says direct on there, it is covered under this portion. All right, looking at the interest, 2 points here is that on all of the suspended loans out there, no interest is going to accrue at all. So interest will stop as of the date that the CARES Act passed, and it will stop through September 30th, 2020. So as long as you've got a covered loan, it is going to be stopped. All interest is going to stop accruing. Now, you can continue to make principal payments during this payment moratorium, but accrued interest does have to be paid off first. So for those of you utilizing income-driven repayments, in a lot of cases, you have a lot of accrued interest that is built up, and you would have to pay all of that off before you see any principal starting to get reduced. But for those who have been making regular payments, you don't have interest accruing. If you want to, during the next 6 months, you can log into your servicer's website and you can make those payments that would apply just to the principal. All right, and then finally, involuntary collection. So all involuntary collection is also suspended through September 30th, 2020. And so that basically means that if your wages have been garnished or you've had a reduction of your tax refund, that stops at this point. So until September 30th. They've also said that if you've made a payment, an involuntary payment through wage garnishment, if you request it, they will refund that money. And that's since the CARES Act passed. So they've stopped all wage garnishment at this point, but they will refund that since the CARES Act passed. And that brings me to the end. So we'll put this slide up again at the end. But what we're going to do now is the 3 of us panelists are going to turn on our videos, and we are going to start going through and answering questions. So if you've got additional questions at this point, go ahead and bring that up. Mary's going to turn off her screen here, and we'll bring this back up at the end.
And I'll be the ones reading the questions. So we're just going to start right from the top. So this is going to be about the stimulus payments. Yes.
Oh, yeah, go ahead. Go ahead. We'll save this to the end, and I've got to stop my screen share. Go ahead. Thank you.
Yeah.
Okay. So what about legal residents with a Social Security number who work in the U.S. but who are not citizens? Do they get the checks?
From my understanding, you must, and this is where it got dicey. So let me add a little bit here. They had to have it, the way that the IRS interpreted the CARES Act earlier this week was that you had to submit a tax return. They went back after a lot of backlash earlier this week, and they said that is not true for those who earn Social Security. So those who are getting Social Security, and there's quite a few, that includes retirement as well as disability, they do not make enough money to actually have to file a tax return. So those that are getting Social Security will still receive these $1,200 checks, and most of those already have direct deposit show up, so those will get them. Other than that, you pretty much have to file a tax return. So it's really dependent upon you filing for you to receive that check.
Okay, and so would that also apply to permanent residents, green card holders?
No, if you must have a Social Security card or a Social Security number and either file a tax return or be under the Social Security umbrella.
Okay. So the cutoff age for children, is that 17 as of the date of their 2019 filing?
Oh, heavens.
It's actually just, it's January 1st of 2020 because it's a refund on your 2020 taxes basically. So it's as of January 1st, 2020. So if they turned 17 this year in 2020, then they wouldn't qualify. But there are some portions where you may get a refund anyway for them if they were 16 last year, and you don't actually have to pay that back. I know that was one of the questions that came up in the chat, is that there will be no clawback provision on this where they try to pull money back. So if they give you money under this portion, then the money is yours to keep.
So that basically means this will not impact future refunds.
That's correct.
And it will be taxed as well. That's another thing. So you will not receive a future tax statement for this.
Okay. Will the phase-out amounts impact the children benefit as well as the $1,200?
Yes.
Yeah,
Okay.
it's all of it.
What if you're filing as head of household with an adult dependent over 17 but is with a disability? Does that impact?
Same rules apply.
Okay. And if someone does not file a tax but they are disabled, will they still get the $1,200 even if they're a dependent of someone else?
Yeah, so hang on. So if they're a dependent on someone else, there's two parts of this.
Yep.
So let's say they have Social Security disability, so they are disabled, right? If they are independent and they file singly and they meet under that threshold, which all would if they're on Social Security disability, they will receive $1,200. Now, the way I heard that question though is if you are disabled but you're filed under, let's say, a parent or someone or a dependent on someone else's return, in that case, if you're again under the age of 17, you will receive $500. If you're over that, they will not. You would have to file independent as a disabled in order to receive that.
It's just to make it clear, like if you're a dependent, you don't receive a separate check. Like you don't qualify for the $1,200. If you were listed for tax purposes as a dependent, then that doesn't apply.
Okay.
Thank you.
And we had someone ask if we have to apply for the stimulus checks. I can tell you the answer is no. And if you get somebody saying you do, that is a scam, and please hang up on them.
And please go to the Federal Trade Commission. They've actually done a couple of good write-ups and reports on these types of fraudulent activities that are actually happening right now in terms of people just calling people and saying, hey, I can get it to you quicker. Or if you apply for X, Y, and Z, or whatever it may be, it's a great resource right now. Phones have been silent for the most part, but I guarantee you once checks start picking up, a lot of us are going to be bombarded by phone calls and people trying to swindle people out of their money. So definitely be mindful of that.
Yes.
And just as a follow-up, I just added to the chat 2 great resources. Michael mentioned the FTC. Another one is the Consumer Financial Protection Bureau. Go to both of those websites and you will see on their front pages about consumer scams because they are very hot right now.
Yes, absolutely.
Are the income limits for 2020 tax returns or 2019?
So good question. Okay, so here's the caveat, right? Let's say in this case, let's mention 2 things. One is if you have not filed your 2019 taxes, you've got something coming for you. You don't have to file those till July 15th. So they've pushed back that April 15th date for an extra 3 months. So you don't have to file to July 15th. So let's throw a few scenarios out there. Let's say you earned a lot of money in 2018. You were over that phase where you would be phased out, but in 2019, your income has reduced substantially. Well, you would want to file your return right now, because if you file that 2019 return and it shows that you're under those phase limits, then you will get those checks. Now, let's flip gears. Let's say you made under the phase limit. Actually, this is my case. So I made under in 2018, but for 2019, we had a good year and we were over the phase limits for that. So in that case, I am not looking to file right away. I'm going to wait till my July 15th deadline, because what they're looking at right now is either dependent if you filed your 2018 or your 2019, they're going off the most recent. Let me give you one more example. For those of you that are in phase out limits for both 2018 and 2019, let's take you into 2020. So yeah, you had a great year last year and you had a great year in 2018, but you lost your job. And right now you don't have any income coming in, and there's no way you're going to hit a phase out limit for the remainder of this year. You will also have the opportunity to receive that money. It's just going to be delayed, because when you file your 2020 taxes is when you can receive that stimulus check. So good news is it is coming. The bad news is it's going to be delayed till you file those 2020 taxes. They are looking, I've seen a few things looking at trying to get you that money by September or other ways to file earlier. But right now, that's kind of how it stands. Until they get a majority of these checks out, they're not going to look at those 2020 filers quite yet. So they're basing off 2018, 2019 taxes.
Is this based on AGI or gross income?
AGI.
Yeah.
So on that follow-up question, then can you then contribute to your traditional IRA or 401k for last year to get your AGI under the limit?
Yeah, not the accountant here, but I believe that's an below the line deduction, not an above the line deduction, so it doesn't affect your AGI. Am I correct, Michael?
Yeah, for the actually had somebody reach out to me. So for like the 2019 file, especially with the extension to July 15th. So if someone was wanting to contribute to a IRA or things of that nature, you could actually also contribute to an IRA up to the new deadline, which is July 15th, which then actually retroactively works back from 2018 for the two. It's one of the few things that you can do after the new year to lower your tax liability. So that's actually something that you could do if you have the capacity and the resources to do it. We don't know how long this COVID-19 situation is going to draw out. So for me, I err on the side of just having cash flow in the meantime, as opposed to kind of taking advantage of a situation. And then we're seeing this push out further into the year where you're feeling pressed and have to draw down from that money anyway. So I err on the side of having a little bit of cash flow or maintaining cash flow, and not even, I get the point here to say what the benefit would be if I did do said thing and be able to get my AGI down a little bit lower. If you play around with the math and it works out for you, great. And you have the capacity to do it, great. But if there's a situation where you may be struggling with capacity and in thinking about how to optimize your tax situation, I would encourage you to deal with the capacity issue first, household level things first. Once we've established a good foundation, then strategically think about what we could do from here.
And let me just add to that, if you're in that situation and looking at it, you're very nuanced and very in a unique situation. So you ought to also be reaching out to your tax accountant for professional advice or your financial planner for professional advice.
Yep. And somebody posted that question again. Did the IRA filing deadline also get moved? Yes. And that information can be confirmed on the irs.gov website.
Thank you. For couples filing jointly, does the entire amount of money get sent to one bank account?
It's wherever your refund goes.
Okay.
Yeah. So if you have if you filed your taxes jointly and then you have direct deposit information listed there, that's where, generally speaking, that money will be funded.
And that includes the $500 for children as well. So all of the money that you will be receiving gets deposited to that one account, or you'll get one check later on if you are getting a paper check.
And does everybody qualify regardless of employment status?
Yep.
Yes.
Okay. If a person is, go ahead.
Yeah, that's all I was saying is it's just the income phase out's not employment.
Okay. If a person is behind on income tax owed or behind on child support, will they still receive the stimulus money?
Child support, you don't. There's actually a provision in there for if you have back owed child support that you wouldn't receive stimulus check money.
However, if you owe taxes, I read today that they will not be, you'll still get your refund even if you owe back taxes. So it's just the child support provision that you will not receive that.
Okay. Will this apply for individuals over 65 receiving Social Security? I feel like you answered that as yes already.
It is absolutely yes.
Mm-hmm.
And actually, honestly, and this is just a side caveat here. Even I know that if you have Social Security and you don't have a taxable income, there are a lot of people who don't file their taxes because of that type of situation. However, because tax fraud is becoming so rampant, especially amongst that population, is definitely a good thing to do is to go ahead and file a simple filing just to have something on file regardless.
What about taxpayers with Social Security and SSNs who are not citizens?
Again, I think we've answered this one already. You have to have a Social Security number and you have to have filed on your taxes.
So even if you're not,
except for the exception of those who fall under that Social Security umbrella.
okay. We have a few that we've answered. I'm just kind of moving past here.
There's a lot coming in.
Yes, there was a lot coming in.
Let's go on to the next topic. I think we've kind of hit the paycheck.
Yeah, that's a good idea.
Another one.
Okay. If you took it out in early January, I'm pretty sure this applies to the withdrawals from the retirement accounts. If you took out the withdrawal in early January, does all of the rules and changes apply, or is there a time frame for which they became available?
From my understanding, you had to have taken out in 2020. So again, I would work with your tax accountant on this as well. I'd be real close with your tax accountant, your financial advisor on this if you do decide to go ahead and remove money out of your retirement accounts. Because a lot of people forget. They think, oh, it's my money, I'm going to take it. You forget there's taxes, and you will be hit with that tax bill.
For the unemployment, military spouses, where should they apply? The state they work in or the state they're a resident of?
Actually, that's actually a very good question. It would be the state. My understanding would be the state that they're a resident in at the present time. That's where they would go first as it relates for unemployment.
And my guess is if you look on militaryOneSource.com and reach out to some of your military specific, you'll be able to have that question answered. I know Military OneSource actually offers free tax advice as well. That would be a great question for them because that's going to be very specific to your demographic.
Yeah, I was going to say, actually, my sister's in this boat, and her experience was she applied in the state that she lived in, but did not make any income in, and they said she didn't qualify. So I would say you might have to talk with your unemployment office in your state.
Makes sense.
Yeah.
Okay. What about those that make less than, I'm guessing, minimum tax due to tips?
For
unemployment, this is when it came up during the conversation.
Absolutely, yes. So if you don't have to file for taxes because let's say you've earned $5,000 or $6,000, whatever it may be, depending on the state, they actually have some designations in terms of minimum income or whatever it may be for unemployment income. But generally, I want to say you have to have earned at least $1,200 or something around there as is stipulated in the CARES Act. So even if you are under the standard deduction part of this as it relates to tax, you still could qualify for unemployment income. The only issue there is that based on the state and how they calculate how much you get, that's going to be based on your highest earnings based on the base period, which means that you could get something from the state, but it may not be a whole lot, which is then why there's also that pandemic unemployment compensation piece for that $600 amount, that $600 amount to apply an additional supplement to whatever that may be. There have been people who've looked at this piece of the legislation and thought that it could do more simply because you're kind of constrained to what you would get from employment based on your earnings history. So that's why that $600 was so important, because it was capturing individuals who did have lower levels of income and wouldn't actually optimize the unemployment income on a higher range as opposed to the lower range in which they would more than likely qualify for with limited income.
And Michael, let me make a caveat here because I know I saw this question as well. Just because the federal government gave states an additional $600 per applicant for unemployment, that is not a guarantee. The states then decide and determine how much money they're going to give out on top of it. So I know that was a question. Do you automatically get it? The answer is no.
Well,
And a lot of these unemployment questions, we can only answer what is in the CARES Act at a federal level. You're going to have to go to your own unemployment website from your state and get your state rules, because you'll have to, most states, I know my state, you have to apply every week for unemployment.
Yes.
So you may not, they might have waived the requirement to look for employment immediately, but that's only in some states. And a lot of states, you have to do this every single week to receive that check. So
Absolutely.
it's going to be very state by state.
It is a very state by state. There is a very state by state element of it, even as it relates to, again, we alluded to this a little bit earlier. Some states offer 26 weeks of unemployment. There are other states that only offer 12.
Right.
So there is going to be some variability. However, under the CARES Act, the way that it's set up is that there are two payments. It would be what you would traditionally get under the state and what they would provide based on their provisions and their laws. And then you also have the $600 pandemic unemployment compensation piece in conjunction with it.
Okay. As an independent contractor, is the SBA loan a better option than unemployment, or can you do both?
That's a good question. So you can't do both. Technically you could, but you're going under the SBA loan, and we're not going to get deep into the SBA loan just because we feel like that it's such a huge piece of the CARES Act that it's important that you go to your local SBA office and talk with them about that. But under the SBA loan, you would be getting a paycheck still. So that's the idea behind that SBA loan, is you can continue to pay payroll, you can pay the mortgage or pay the interest on your mortgage, you can pay rent, few other things, some payroll expenses like health insurance. So it's important to recognize that under that, you would still be employed, and so would your workers. So that's the idea behind that SBA loan. And that actually starts today, that SBA application process. So if you're in that boat, check with your local SBA office, I would say, and move forward in that direction, because the unemployment, it may take a while until it actually kicks in, and there's all these other provisions. And so I would recommend that you check with your SBA office today.
I think another quick thing that we need to mention here, it's one thing to say check with these offices. It's another thing to understand the context of the time in which we're in.
Right.
These offices are being overloaded with communications, email, phone calls, things of that nature. So just be mindful that as you're navigating this, being persistent is going to be incredibly important. Maybe trying to get in as early as you possibly can with a phone call or something like that in the morning to avoid long wait times and things of that nature. And even as it relates to unemployment insurance within a particular state, states are now having to handle a level of volume to expedite this process, while then also awaiting for, again, additional guidance from the federal government on how to actually operationalize some of these things and making sure that they're sure in every area that they need to be sure on as it relates to the distribution of these funds. So please be mindful. We say reach out, but then also understand that there are going to be some delays. And we just want you to be aware that that is going to happen. It's going to be par for the course as we navigate this. Not just this month, but maybe going into next month as well. But just be aware that when you are reaching out to communicate with these agencies, that there are going to be delays.
So Michael, let me add on to that as well. This is also a time that you really must have good helping professionals around you. So if you don't want to reach out to SBA, you know who you should be reaching out to? Your financial advisor and your personal tax accountant, or your business tax accountant for you small business owners, because they can be helping you make these decisions without having to wait on SBA. Of course, your community has the resources, like your local chamber might have resources. Again, it's going to be very community driven. But if you are an independent or a small business owner, you really should have a cadre of resources and not only be dependent on the government or SBA to do that. And so this is the time to reach out. And if you don't have it, find them. Now's the time to find those resources.
Yeah.
Okay. If you're employed full-time and supplementing your income as an Uber driver, can you get an unemployment for the loss of that extra income?
So if you're fully employed, but then you have a side gig, in many instances, that would be no. If you're fully employed and you're just using the side gig as extra money, and it wouldn't cover under the pandemic unemployment assistance portion of this.
Do we have any idea on how long it will take benefits to start, or is that entirely state specific?
There's a couple of things there. It's going to be state specific because different states again have different rules as it relates to this process. So, for instance, and depending on how you apply, so if you're self-employed and then you're applying for unemployment benefits, it could actually take up to 2 to 3 weeks actually for your information to get processed. And then once it's gotten processed and approved, there then could be an additional a week waiting period as well, which could stretch this out a little bit further. So again, it's very important that you go to your state's Department of Labor office to understand what the timeframes are as it relates to that. The CARES Act does provide some incentive for states to do away with the 1 week waiting period because they provide a guarantee that they would back resources to pay that so that money can get to households sooner as opposed to later. However, for other individuals who are unemployed and that information is provided through their employer that they're now unemployed, it can take 48 to 72 hours to get things processed. And whether or not there's a waiting period or not could impact how timely people get funds. But then also, some states are being more proactive than others as it relates to executing some of this stuff and moving forward on these things. So again, it's understanding what's happening in your state. How quickly they're moving on things is going to be very important to get a gauge for because it's going to be very different from state to state how effectively they start distributing funds in this regard. And then go ahead.
And to answer that, I think you might be frustrated that we keep pointing back to the states, but that's really the answer. So somebody even asked later, well, will you still get $600 if the states run out of money? You know what? It's the federal government giving this to the states. You will not ever receive money from the federal government directly to you for unemployment. It must go to the states. So it's really very state by state specific.
Go ahead, Ryan.
No, that's all. I was just agreeing with Mary that it really does vary. I know I've looked up the Utah laws because I'm based out of Utah, so I can help you. But it does vary so much. I looked up a few other states as well, and it's
all over the board. It's all over the board. And then speaking to that, the state by state piece of this. Now, remember, even under the pandemic unemployment assistance, where now it covers individuals who are self-employed and things of that nature, states are still having to go in and think about now, how do we assess these situations based on legislation from the federal government? The federal government isn't coming down and saying that we're going to review this situation. It's actually still left up to the states to actually review and designate who is and who doesn't qualify based on your particular state's laws. So that's why we can't give a blanket answer because it does from state to state. It matters.
So we're running short on time, so let's move to housing. How can I tell if either myself or my landlord has a government-backed loan?
You do have to ask, and you can check with your servicer or with your landlord, or if you've got you can check with the Fannie Mae or Freddie Mac websites to see. That's what I did, is I just checked both websites to see if mine was backed by one of those. But your servicer is required to tell you, so you can just ask them.
Yes.
And then as far as the rental provision, Michael, do you want to take that?
Say what again?
The rental provision to find out if it's backed.
Yeah, absolutely. Again, speaking to like Ryan's point, if you go to Fannie Mae or Freddie Mac to look to see if your unit or whatever your multi-family unit dwelling is covered, they actually have some interesting language on there. It will say that you would have to have requested permission from the individual to get that information. I would probably think that most folks would say, I have the information, I'm going to put it in anyway. It doesn't keep you from doing that. But I would actually, again, this is a time where you need to be speaking and communicating with your landlord. Ask your landlord directly. And this isn't just over the phone. This is make sure that this information is in writing as well. So the first thing to do would be to speak directly to your landlord. If you want to verify that information, you could go. If you have all the information that you need in terms of the person who actually owns the property, you would just need their first name, last name, who owns the property, the address of the property, and it will let you know whether or not it's covered under that regard. But they would be required to tell you the truth as it relates to that. If they don't, for whatever reason, that's why you get this stuff in writing, so you have some recourse or burden of proof. So in the event that you would need to take some legal recourse later down the line, you would have the option to do that.
Can I make a statement right here? I've had a lot of questions of people thinking that there's going to be some kind of free money or you don't have to pay for the next few months. Forbearance is not free money. So if you can still afford to pay your mortgage, if you can still afford to pay your rent, you should be doing that because you're going to owe this in the future. So there's no bailout here. This
There's
is
no
not
bailout.
2008, 2010 time period. The government's not giving us any money to bail out housing by any stretch. So the only thing this is hitting the pause button temporarily
Yes.
to be able to give you a few months to reset and get your ducks in order if you don't have cash flow. If you've got savings, if you've got other things, you really should be, again, communicating with your service provider, communicating with your landlord. But if you can make those payments, absolutely, because all it's going to do is pay it out in the long run. If you own the house, you're going to have to lengthen the terms of that loan or your payment's going to increase in the future. So just make sure if you can do it, do it. There's nothing free in this. And that also, oh, go ahead.
Yeah, I was just going to piggyback on what Mary was saying, and actually speaking of what Ryan was saying as well. This is absolutely the if you don't have a spending plan or a budget, and you're thinking through this on a biweekly basis or monthly basis, the whole benefit of having a spending plan is it actually provides you a direction of where you're going, how you're going to navigate it, how you're going to get there, and if you need to pivot, you can actually use your spending plan to pivot. So even if you're in a position where you feel that your financial stability is unstable based on your place of employment, there's another option that you can consider along with Mary's, is that instead of necessarily paying the money, you can actually keep that money and designate it and place it into a savings account or whatever it may be, that you don't touch it, that you don't spend it, that you only use it in the event that the worst case scenario actually happens. Then in that event, you use it for the purposes to secure your family. But if the worst case scenario doesn't happen and you didn't pay out any of that money, but you just kept it in a savings account or whatever it may be, that money will still be there in a back end to pay everything full, even as it relates to student loans. You would actually be able to pay all those payments up full anyway. It's just that you give yourself the flexibility to have cash flow, because once you've paid these payments, you don't get that money back. And if you've lost your job on top of that, then where are the additional resources going to come from? So it really depends on your unique situation, actually having a spending plan, not looking at it as something that constricts you, but actually provides you the frame of mind to actually pivot and make decisions that are rooted in your reality.
Okay, we only have a couple of minutes left, so let's really quickly touch on student loans.
Okay.
One, the interest freeze. Does that happen automatically, or do you have to contact your servicer?
Automatic.
Okay, and does it apply to people who are not yet in the repayment phase?
Yes, so all interest is being frozen on those direct loans for students in school now.
Okay, and can students opt to continue paying if they were not financially impacted?
Yes, they sure can. But again, going back to Michael's point, does that make sense right now? Maybe, maybe not. But yes, you can continue paying. And for the most part, those of you who are students, you would be paying down some principal now, unless you've got some accrued interest that has built up.
Does this apply for Parent Plus loans?
Yes, it does if they're direct loans.
And then for new loans that are being taken out right now for spring, summer, and fall?
Yes, again, that the interest freeze will go into effect for those as well. So for all of those unsubsidized loans, the interest freeze goes into effect until September 30th.
Okay, and then really quickly back to a mortgage payment. This one popped up right before. Escrow payments still need to be made, right? For taxes, insurance, they're not covered under this moratorium, right?
This is something you would want to check with your service provider. So if you have a mortgage, you need to be picking up the phone and calling your service provider, because yes, taxes do not stop. And the last thing you want to do is to not have insurance coverage during this time.
Right.
So you need to be talking to your service provider on that.
And actually, I'll add something here. One of the things that I've run into working with individuals is that there are some people whose personality type makes it very difficult for them to make the call. So if you know that you're that person, I mean, sometimes it's easy to say, just make the call, make the call, make the call. But we have some people who, if they got the wrong meal at a restaurant, they wouldn't say anything to the waiter. So if that is your personality type, if you have that friend who you need to be on the phone with you in order to make that call, make it a three-way. Have that friend be on the line with you, because some of us don't have the personality type to be that type of assertive. And if you need somebody, just understand you don't have to do this alone either.
Okay, and I have a couple of just random questions that popped up. One, the contribution deadline for retirement for 2018 is still 7/15, even if you've already filed your taxes, correct?
For 2019, did you say 18 or 19?
Well, so if you're contributing right now, you can still contribute for 2018. But if you've already filed your taxes, you can still contribute for 2018, but maybe you have to do like a revised tax return.
Yeah, check with your accountant on that.
Thank you.
Yes.
And for divorced parents who alternate claiming the child, who gets the $500?
Whoever claimed them on the taxes on it, whether it's 2018 or 19 that you're going off of. So whoever claimed them on the most recent tax return that's been filed, that's who will get the 500.
Okay, and the very last question, if you owe back child support, that $500, does it still go to you or does that go to pay back the back child support?
Back to pay back child support. You don't get it. I'm
Okay.
going to go ahead and take over, and I want to show you my screen for the end. We put together some helpful resources. These will be on the side. Everything from, if you don't know about surviving debt, I would highly recommend this book because it will answer all of your questions and then some. And then, of course, mortgage help, student loan help. So we'll put that up at the end, and you can receive that as well. Finally, we want to make a shout out for all AFC counselors on this call. Thank you for being a part of us. If you want to get help from an AFC counselor like ourselves, we would love for you to go to afcpe.org. At the top, there's a reach out and find an AFC counselor. Please reach out and do so. We also want to talk about, we've received some generous funding from Wells Fargo recently, and right now we're going to be able to offer AFCPE certified professionals like us are going to be offering free one-on-one virtual financial counseling and coaching in the coming weeks. If you're interested in this, you check the afcpe.org website by no later than Monday, next Monday, April 13th. We're going to have information for you to sign up and meet with a coach for free. So those are great options for all of you, and we hope this was helpful. Thank you. Please fill out the survey. Let us know what we can answer more questions on, and we hope to see you again in the future. Thanks for your participation, everyone.
Yeah, thanks,
Thank you,
everyone.
everyone.
Thank you. This was thank you.